Good morning. It's the appointed time and we have a quorum. May I suggest that we will first ask deputations and individuals to come in to join us first. Good morning, Ms. Zhang, Principal Assistant Secretary, and representatives of the DOJ as well as the Hong Kong Monetary Authority. We have a quorum. We will ask banking representatives to come in as well. Let me introduce the representatives from the government. We have Ms. Estrella Zhang, Principal Assistant Secretary for Financial Services and the Treasury, Mr. Eamon White, Head of the Hong Kong Monetary Authority in relation to Resolution Office, Mr. Robert Probin, Senior Manager, Resolution Office of the Hong Kong MA, Mr. Michael Lam, Senior Assistant Law Draftsman of the Department of Justice, Ms. Carmen Chu, Senior Government Counsel of the Department of Justice, and Ms. Helen Chan, Senior Manager of the Resolution Policy Unit of the Hong Kong Monetary Authority. I thank deputations and individuals for coming as well. Good morning. This is in relation to the Financial Institutions Resolution Loss Absorbing Capacity Requirements Banking Sector Rules. This is a public hearing. I welcome you all. First of all, I'd like to declare interest. I am the chairman of this subcommittee. I'm also a consultant of the Bank of China, Hong Kong. If you require simultaneous interpretation service, please put on the earpiece. You may choose channels. Channel 0 is the floor, channel 1 is Cantonese, channel 2 is English, channel 3 is Putonghua. There are 9 deputations coming to join us today. We have received 5 submissions. One of them is a joint submission from 5 banks. I will ask deputations to speak in turns. Each deputation will have 5 minutes. At the end of that, I'll ask the administration to give us a preliminary reply. Members may ask questions of the deputations or of the administration. As per our usual practice, unless you have specified that your submission is not to be made public, the Secretariat has already uploaded your submission onto the website of the LegCo, and it has also been given to members. If you have yet to give us your submissions or supplementary submissions, please give it to us as soon as possible. Let me remind you all that what you say here and what you say in your submission is not covered by the LegCo Powers and Privileges Ordinance. I now ask Dah Sing Bank representative Mr. Gary Wang to speak. Thank you. Good morning, everyone. I thank the subcommittee very much for inviting us to come here to give us our views on the LAC draft rules. Chongqing Fubon Public Bank and Shanghai Commercial Bank and Chongqing Bank, we have formed a small group. We have given you our joint submission. Let me briefly set out our views. In relation to the regulatory regime of the Hong Kong MA, during the financial crisis, local banking sector has remained sound and required no assistance. According to Basel, local banks are deemed to have sufficient capital. We understand that there is a higher capital requirement to be met, and there is also more requirements to be met. I do think that when it comes to capital requirement sufficiency, compared to other jurisdictions in the world, that of Hong Kong is very sufficient. When discussion was made with European countries and the US, it seems that the focus was on GSIB, globally systematically important banks. We are very small banks. These requirements These requirements do not apply to us. In January, the Hong Kong MA issued consultation paper on the LAC. We are aware of the definition of SIB. That is, the Hong Kong MA has unfettered discretion in determining whether a bank is one of those. Well, there are two different types. There is a GSIB and DSIB. Global and domestic. In relation to requirements on small banks, that is, those that represent less than 2% market share, there will be higher requirements. We are very concerned. As a result, on the 15th of September, October, we have expressed our wish. We know that the Hong Kong MA intends to set the threshold at $150 billion of consolidated total assets or around 0.6% market share. We have given you our submission, which is similar to the one that we've sent to the Hong Kong MA. We think that the threshold is set too low. Small banks should not become in-scope banks. The threshold of 2% is a standard. Small banks should not be subject to the LAC requirements. The justifications are very clear. We have set out 6 reasons in the submission. There is a limitation of time. I'm not going to go through them one by one. I ask members to read them carefully. We think that small banks should not become SIBs, and it should not be included under the scope of the LAC requirements. We ask for your understanding. Our conclusion is that there are no other regulators in Asia that have applied these rules onto small banks. And a lot of them don't even use LAC requirements. Global regulators focus on GSIBs and DSIBs. 2. The implementation of LAC will bring huge and not an ineffective cost. It will undermine our competitiveness and also ability to provide better service to the community. 3. Small banks are not systematically important. That means we don't require taxpayers' money to keep us afloat. If there is non-viability, and if we're subject to the LAC requirements, well, it will seriously affect us. We think that the threshold should be set at no less than 2% market in aggregate assets. We ask the subcommittee to seriously consider the requirement and the definition of GSIB, DSIB, as well as authorized institutions representing more than 2% market share. Those are the only ones that should be subject to the LAC requirements. Once again, I thank everyone for giving us the opportunity to come to speak to you. Thank you. It was Dah Sing Bank, Mr. Gary Wang. Next, we have from Bank of China, Hong Kong, Ms. Annie Yim.
Of the Committee on Financial Institution Resolution Requirement Banking Sector Rules. On behalf of BOC Hong Kong, it is our deepest honor to express my gratitude to your close attention to the draft rule of the Total Light Requirement Framework and its profound impact. Today, I would like to briefly share our views on the draft. Firstly, we are fully supportive of the MA's effort to establish the TLAC framework in Hong Kong. Hong Kong is a preeminent global financial center that plays host of 29 out of the 30 GSIB, We believe the implementation will enhance the stability and effective operation of Hong Kong financial system and facilitate orderly resolution of entities and material subsidiaries so they reach the point of non-violability. The TLAC framework that meets international standards will undoubtedly enhance Hong Kong's status as global financial center and are highly valued by the industry. We understand, just as other initiatives of resolution planning, that on the condition to ensure largely consistency with FSB standard, the MA has taken into consideration of Hong Kong's unique status and situations when formulating its own TLAC standard. We understand that effective resolution to international financial institutions relies on effective cross-border cooperation between resolution authorities. This is a prerequisite, not just for implementation of TLAC framework, but also for whole resolution planning phase and rulemaking phase of minimum TLAC requirement. For instance, in pursuant to FSB TLAC standard, host and home resolution entities should reach out an agreement through CMG when formulating internal TLAC requirements to material subsidiaries of GSIP. We trust that MA has made significant effort in this regard. The FSB has requested EME GSIP to implement TLAC requirement in a phased approach, starting from 2025 to 2028, about 6 years later than non-EME GSIP. EME GSIP will need considerably more time to prepare and implement the TLAC in order to fine-tuning the financing structure and increase weight of debt securities. Material subsidiaries of EME GSIP are facing similar challenges in Hong Kong. In consideration of macroeconomic conditions in emerging market countries and practical situations, EME GSIP will face a dilemma if MA implements a much earlier schedule for their material subsidiaries in Hong Kong. In sum, we earnestly request MA to fully consider a coordinated implementation arrangement of TLAC for EME GSIP and their material subsidiaries to promote more effective cross-border resolution coordination and optimal allocation of TLAC capabilities between jurisdictions within the GSIP groups. We hope the MA will reach out agreements and consensus with home authorities in regards with implementation schedule and specifics of internal TLAC requirements for material subsidiaries of EME GSIP in Hong Kong. Meanwhile, we suggest MA to suggest adopting minimum TLAC requirements of 18% under the FSB standard and allow a phased-in approach. As Hong Kong has already rolled out more prudent and stringent regulatory capital requirements and standards than vast majority of other jurisdictions, we trust there's sufficient room for MA to accommodate the requests from the industry. Lastly, we reiterate that implementing localized regulatory framework that meets best international standards will improve financial stability and enhance Hong Kong's status as global financial center. But we do believe that a fair and reasonable regulatory framework would help providing level playing field for all market participants. Chairman, this concludes my view. Once again, thank you for your attention.
Thank you, Ms. Yim. Next, we have from Chong Hing Bank Limited, Mr. Vincent Chan. Thank you, members. I thank the Hong Kong MA, the FSTB. Good morning, everyone. I thank the chairman and members for giving us the opportunity to come here to speak to you. Our bank has been talking to Mr. Wong and the Hong Kong MA from time to time. We have already expressed our views to them. I'm not going to repeat them. First of all, I would like to say that we support the Hong Kong MA and the administration's implementation of measures to maintain healthy development and to maintain stability of our banking sector. We share Mr. Wang's view. We do think that these will help promote the healthy development of Hong Kong banking sector and to maintain our competitive edge. We are part of the banking sector, we hope that we will be able to do our part and make contributions. Lastly, I would like to say 2 more points. First, if these rules are to be implemented, I hope that the threshold that is in relation to the $150 billion and the timetable, please consider increasing the threshold and setting a longer time frame for the implementation so that we can get better prepared. Of course, we will support the development of the banking sector. Just as the other 2 speakers have said, apart from the LAC interest rate, the entire resolution regime, supporting measures, the formulation of resolution plan and strategy, it will eat up a lot of our internal resources. This is a huge expenditure. We hope that at the time of implementation there will be some flexibility, and that for different types of banks, I hope that the requirements and the will be clear. There will be guidelines provided and a longer time frame for us to get prepared.
Thank you very much, Mr. Chen. Moving on to Bank of East Asia, Mr. Tong Hon Sing, Deputy Chief Executive and Chief Operation Officer.
Inviting the Bank of East Asia to give our view on the rules prescribing loss-absorbing capacity for authorized institutions in Hong Kong. I take this opportunity to state that our bank is fully supportive of the development and implementation of a recovery and resolution framework to safeguard the stability of the financial system of Hong Kong. In respect of the proposed LAC rules and the LAC Code of Practice consultation, our bank has 2 major comments. First, while we understand the rationale to have the minimum debt requirement aiming for the AI to be recapitalized without an external source of funds, we are of the view that the loss absorbency debt qualification should be determined by the instrument's legal form instead of by its accounting classification. According to the LAC Code of Practice consultation set out by the Hong Kong MA, the instrument accounted for as equity on the AI's balance sheet, such as AT1 instruments, will not be considered as a debt component of LAC. In fact, those AT1 instruments being classified as equity under the accounting rules are actually available for loss absorption during the resolution situation, as they are not subject to any hard trigger threshold for write-off during the pre-resolution period. Our bank therefore proposed that for those AT1 instruments, although accounted for as equity, they should be considered and included in the debt component for the minimum debt calculations for the LAC requirement. Second, we noted that it is a general concern of the industry that the proposed implementation timeline of LAC for non-GSIP AIs for meeting the LAC requirements in 24 months is rather too tight. The reason being that all such AIs may need to raise significant amount of LAC instruments in the market for fulfilling the required LAC position in a relatively short period of time. Given the volatile economic condition and tightening market appetite for primary bond supply, fundraising through the debt capital markets will be a big challenge for all of us. And the resultant high funding cost is going to put pressure on the bank's profitability. As such, our bank suggests that MA should formulate the implementation timeline in a more flexible manner. In order to achieve a smooth implementation for LAC, the authority should review the proposed deadline for meeting the LAC requirements for each individual AI according to its specific situation and its actual gap position of the LAC compliance. Hong Kong MA may consider introduce a phasing approach for implementation starting from year 2022. I hope the authority could consider our bank's comments and suggestions. Thank you very much.
唔該晒唐總裁。
Thanks very much, Mr. Tong. Next, I'd like to invite Ms. Wang Li Chen, Wendy, Shanghai Commercial Bank Limited. Thank you, Chairman. Mr. Wong has already spoken up for the small banks in Hong Kong. I've got nothing else to add. Thank you. All right, thank you. Next, we have Ms. Kan Lai Fun, Lan Yan Commercial Bank Limited, Head of Financial Management Division. Good morning. I'm on behalf of the Len Yen Commercial Bank. In the consultation document, it is mentioned that $150 billion total asset would be the threshold for inclusion. It is our bank's opinion that this is something that should be considered. We feel that in the light of overseas jurisdiction, the LAC requirement would be targeting the GSIP group banks. If all the banks in Hong Kong are incorporated into this mechanism, then we may not be able to achieve the desired objective of maintaining financial stability. We doubt whether this would stand us in good stead. So we believe that there should be a phased approach in terms of implementation for the small and medium-sized banks. They should review the impact that they will have on the market and then decide individually whether they should be incorporated into the LAC mechanism. If we are classified as a LAC requirement, we have to measure up to 1.5 and 2 times the requirement, and we have the cost of issuing instruments will increase, and we have to face competition in the market, and the costs arising out of this are likely to be passed on to the customers, and it's only through this that they will be able to maintain their development. If all the banks in Hong Kong are incorporated into LAC, then I'm wondering whether there would be any adverse impact on the development of the banking industry in Hong Kong. So this $150 billion threshold should be reviewed. Perhaps we should look at the market share as the threshold, like 3% of the total asset as one of the considerations. Also, other than local banks, in a group, we have to bear in mind the entire group, the businesses of the entire group. So when issuing the debt instruments, other than covering the local business, we also have to cover the resolution cost of the subsidiaries in other jurisdictions. And if there are more subsidiaries elsewhere, then the cost will be very high. In this regard, we doubt very much whether this is an appropriate arrangement. So I think at this present stage, we should look at the combined level or the solo level for the subsidiaries in other jurisdictions. We should do it in accordance with the host countries. If this has to be implemented, we feel that 2 years' time will be quite difficult, because in the market we have to absorb so much capital, and the costs incurred for the bank will be very, very high. I'm wondering whether this will be conducive to the development of the banking industry. We should bring it in phases. For large banks, they can accomplish this in 2022, but for smaller banks, we can allow them to accomplish this in 2024 or a later time. Thank you. Thanks very much, Madam Khan. Fubon Bank Limited, Mr. Kwong Kwok Wing, Senior Vice President and Head of Financial Markets. Good morning, members. I go along with my fellow banking practitioners, and I agree with them in relation to the implementation time of the LAC. I've got nothing much to add except to say that for the small and medium-sized banks, they are running, they are operating in great difficulties, in particular in the light of the uncertainties, and the operating conditions would be even more challenging. If LAC is to be brought in, it would certainly compound the problems that we're encountering. So in terms of implementation, I'm wondering whether the small and medium-sized banks would be allowed more time to get themselves ready for it. At the moment, the costs are rising. We're running short of resources. And if this LAC is sprung on us, certainly a lot of banks would face some tremendous challenges. So I hope that honourable members or the Hong Kong MA will consider the small and medium-sized banks and also the difficulties they are running under. And the LAC, if implemented, would certainly compound the difficulties. All right, thanks very much. Mr. Kwong. All right, OCBC Wing Hang or CMB? OCBC, OWH, Mr. Tan Yo Leung, Chief Risk Officer.
Chairman and committee members, OCBC Wing Hang has actually submitted its written submission on the views about the proposed LAC rules. We are generally supportive of implementing LAC rules in Hong Kong, especially given the status of Hong Kong as an international financial center. We shared similar concerns with some of our peer banks about the applicability of the LAC rules for the smaller banks. Hence, in our proposal, we have actually suggested to provide additional filter on what is the scope of applicability of LAC rules. We have quoted an example of a deposit market share of not exceeding 3% as a benchmark, instead of 150 billion asset size, which will capture many of the smaller banks in Hong Kong. I have nothing further to add. Thank you, Chairman.
OK，唔該晒啊。
All right, thanks very much, Mr. Tan, Chief Risk Officer. Next, CMB Wing Lung Bank, Mr. Chung Chong Kung.
Legislative Councillor, it's my pleasure to be here to give our view on behalf of our bank on financial institution resolution loss absorbing capacity requirement banking sector rules. In general, we have no objection on the basic principle that resolution entity and material subsidiary should be required to meet LAC requirement in order to facilitate the orderly resolution of non-viable AIs. However, we would like to expand our view on certain areas. First, such LAC requirement should only be applicable to those systemic important banks, but not to those small banks in Hong Kong. Under Section 2.6 of the Draft Code of Practice on Resolution Planning LAC requirement, the HKMA considered that the non-viability of any local incorporated AIs with total consolidated asset of more than 150 billion Hong Kong dollar will be likely to pose a risk to the stability and effective working of the financial system of Hong Kong. That means almost all local banks will be classified as resolution entity and accordingly be subject to LAC requirements. The proposed threshold of 150 billion Hong Kong dollar is only 0.6% of the total assets of all AIs in Hong Kong, which is considered very small. AIs with such insignificant market share would be small in size and simple in operation, and should not be regarded as systemically important, and its non-viability will not pose a risk to financial stability in Hong Kong, including to the continuing performance of critical financial functions. Small bank has already been required to incur significantly increased compliance costs as a result of the imposition of Basel III regulation. Imposing LAC requirement on small banks will further increase their compliance costs as they are required to issue higher cost LAC debt instruments, which will undermine their profitability and weaken their competitiveness in the market. Therefore, such smaller banks should not be classified as resolution entity and material subsidiary, and should not be subject to LAC requirements.
To be in line with the approach of setting systemically important bands, it is more appropriate to set the LAC requirement to cover those globally systemic important bands and domestic systemic important bands, G-SIB and D-SIB. If HKMA would like to cover certain non-G-SIB or non-D-SIB in the wire group, it is suggested to increase the threshold to 600 billion Hong Kong dollar, which is only about 2.5% of the total assets of all AIs in Hong Kong. AI with this size would not be likely to pose a risk to the stability and effective working of the financial system of Hong Kong. This can also avoid weakening the competition for small AIs in Hong Kong. Second, timeline for meeting LAC requirements should be in line with other countries in the region and the parent's home regulator. We looked at the present intention is to classify resolution entities or material subsidiaries of non-EME G-SIB in 2019. The other relevant entities are expected to be classified as resolution entity and material subsidiary by 1st January 2020. And so will need to meet their respective LA requirement by 3rd January 2022. The implementation schedule seems quite fast when compared with other countries in the region. Australia just issued a discussion paper and is estimated to implement TLAC in 2023. Mainland had not yet fixed their implementation time schedule. Certain countries, such as Singapore, are still pending on the imposition of TLAC requirement. Imposing a TLAC last LAC requirement in Hong Kong when others in the region are planning to do so on a slower timetable would put banks in Hong Kong at a competitive disadvantage. In addition, the implementation should be in line with the parent home regulator as far as possible. As for our Chinese banks, the LAC debt instrument issued by the Hong Kong subsidiary will most likely be subscribed by our parent in the mainland. This will then require our parent bank to issue in parallel similar LAC debt instrument to avoid capital deduction at its solo level. However, mainland had not yet announced the time schedule for implementing such LAC requirement and the treatment of holding of such instruments. It is estimated that it is most likely to implement after 2025. Therefore, it is expected that the HKMA should kindly consider this factor to bring forward LAC requirement to Chinese banks to keep in line with the timeline of their parent home regulator. Thank you, Chairman.
好，唔該晒張總監。我諗而家我想
Thank you. I would now like to ask the administration to reply. Well, the subcommittee has raised 3 points last time. You may as well reply to that on top of deputations' views as well. And there are a number of observations expressed by the deputations. I would like to first of all tell members that we are now here to scrutinize the rules. There is a threshold of $150 billion mentioned by deputations. It's something that is incorporated in the code of practice. So today we are here to scrutinize the rules, and the point made by the banking sector is something in the code of practice to be issued by the Hong Kong MA, and they are doing a consultation on this. So you mentioned a threshold in the code of practice. Currently it's 0.6%, and I've heard deputations suggesting 0.2, 0.3, 0.4%. Please address that. And there's also the EME G-SIB implementation table on the mainland, and whether there will be longer time frame given to provide more flexibility. And a lot of banks said that, well, in order to implement these resolution plans, it will use a lot of their cost, which undermines their competition. And they also mentioned a point that if there is requirements of issuance of LAC instruments, would it impact Hong Kong's financial system stability? And they also asked about why this is not done in a legal form but an accounting approach. deputations also mentioned that the group may have other businesses in other places. Perhaps you may consider implementing these requirements here in Hong Kong, whereas for other places you can give them more time. We'll hear from Mr. Probin or Mr. White. Shall we hear from you first? Perhaps I will say a few words as a general remark. Deputations have expressed a number of views. There is some common ground. First, the point of a threshold. As the chairman said, the subcommittee is scrutinizing a piece of subsidiary legislation relating to LAC rules. It is in effect the formulation of a framework. Under this framework, what financial institutions will be defined as a resolution entity that is to be dealt with by the Code of Practice to be issued by the Hong Kong MA. They will set out the considerations and information about threshold. Starting from the 19th of October, the Hong Kong MA has been consulting the sector. I asked the sector to express your views to the Hong Kong MA. I believe that the Hong Kong MA will take everything into consideration before implementing the code. This is a very good opportunity for the Hong Kong MA to directly collect views. I believe that they have heard you. The second point is the timetable. Some banks, regarding the situations of their group or of their banks, they ask for flexibility. The resolution regime requires the authority to mandate resolution planning of each entity. Once a framework is put in place, the Hong Kong MA can talk to individual banks about their situation and formulate the most effective resolution strategy, as well as the specific LAC requirement. Timetable is something similar. When firm-specific work starts, they need some time to complete all the work. Of course, they have to take into account the scale and the systemic importance of each bank. They will also take into account the individual situation of the banks and make adjustments when they give them the timetable for implementation. A number of banks have talked about cross-boundary coordination. I'm sure that is something that the Hong Kong MA will do. And I would like to ask Mr. White to give more details.
Thank you, Mr. Chairman. Honourable members and the banks here today. A number of issues were raised, so I hope you allow me around 10 minutes maybe to address them, if that's okay.
Sure.
And I think to just reiterate the point made by FSTB, the LAC rules, what we're aiming to establish here is a framework for implementing LAC requirements for authorised institutions. The rules themselves do not automatically set LAC requirements. For that to happen, the HKMA needs to engage in resolution planning on a case-by-case basis with each individual institution, set a preferred resolution strategy based on a detailed understanding of that firm's position, and that's what these rules aim to facilitate. The rules themselves do not automatically set the LAC requirements. Now, the MA, in deciding what criteria to take into account when determining which AIs are subject to the LAC rules, will consider a range of criteria, including the 150 billion consolidated assets threshold discussed here today. And that has been set out in a draft code of practice published by the MA. And again, I really welcome we're here today to gather comments on that issue. We'd also actively encourage banks to contribute to the consultation process before it closes on the 3rd of December this year. We'd welcome those submissions, in particular the same views on the 150 billion threshold. But I think it's important maybe just to give me a few minutes just to explain the MA's consideration of why that threshold is currently under consultation and some of the factors that we've taken into account in setting out that threshold of 150 billion. And I think the key issue here is we've examined the extent to which the non-viability of any locally incorporated AI, big and small, would likely pose a risk to the continued performance of critical financial functions, in particular taking into account the extent of deposit-taking activities. So in considering the 150 billion threshold, we've examined the numbers of depositors in individual banks, the volume of deposits, the number of transactional accounts, which is a particular measure of how reliant individuals are on regular access to their accounts for day-to-day payments. We've also examined carefully the number of depositors that are not fully covered by the DPS protection. The resolution already has considered these factors in identifying the entities that are proposed to be within scope of the LAC rules and identifying the 150 billion threshold. And we think that this is a balance and it tries to strike the right balance between protecting financial stability and depositors in Hong Kong and avoiding, insofar as is prudent, the imposition of onerous requirements on smaller institutions. Now, we recognise that some small banks here today that fall above the line may have different views. In particular, the argument has been made that entities that are not DSIBs are not systemically important and so should not be subject to the LAC requirements. Just to provide you a little bit further elaboration on the MA's consideration of the threshold on this issue, I think we see the sort of systemic importance as a spectrum. DSIBs are those entities that are very top of that spectrum, whose disorderly failure would potentially have an extreme adverse impact on financial stability and the system as a whole. But the fact that an entity is not a DSIB does not mean that it does not pose any systemic risk if it fails. We have said in the draft Code of Practice that a key measure of an entity's systemic risk and failure is the scale of its deposit-taking activities. And this is a really important point. If an institution fails and it is not resolvable, all depositors risk losing access to their funds and accounts for a period of time as the DPS payout occurs. But the DPS does not cover all deposits, nor all funds. If an entity fails, is not resolvable, and goes into liquidation, those who are not covered by the DPS could lose access to their funds for years during the insolvency process. This would result in significant harm for those depositors not covered by the DPS. The resolution authority must balance the interests of private banks who are subject to the LAC rules and the general public's interest in depositor protection in determining which institutions must be resolvable, and we should not sort of underplay the importance of LAC in protecting depositors. So I think that's a key point that we'd like to highlight. But in determining any resolution strategy for an AI, the resolution authority will engage in detailed bilateral dialogue with that institution. Under the rules, any entity that is proposed to be classified as a resolution entity or material subsidiary has the statutory right to make representations to the resolution authority on that matter. However, for any entity that the failure of which would pose a risk to the financial stability of Hong Kong, it is appropriate that such an entity is resolvable, which is likely to require being subject to some LAC requirements. And as mentioned earlier, as a premier international financial centre, Hong Kong's economy benefits from a large banking sector. But the banking sector is very large in relation to Hong Kong's GDP compared to other jurisdictions. So we need to ensure that we have an appropriate measures in place to maintain financial stability for the benefit of the sector, the general public as depositors, and the wider economy. But in taking into account views on the 150 billion threshold, we recognise that banks here today have expressed a different view. As such, for banks below the 300 billion threshold, the Resolution Authority is considering allowing a longer timeline for classification and for the meeting of LAC requirements. So that's a key point I think we want to reiterate. And in addition, as set out in the consultation draft of the Code of Practice, the Resolution Authority would expect to keep the threshold under review. Specifically, the Resolution Authority would expect to review the threshold no less frequently than every 3 to 5 years. Now there are sort of key points I think on the threshold. There's a couple of other important points I'd like to address, particularly on flexibility within the LAC rules, to take into account case-specific circumstances and the position of smaller AIs. So it's important to note that having assets above 150 billion threshold does not imply AI will automatically be required to meet LAC requirements that are double capital requirements. Instead, the threshold represents a starting point for the Resolution Authority's AI-specific resolution planning. Only following the assessment of AI-specific information and its individual circumstances, as well as formal decisions by the Resolution Authority to set a preferred resolution strategy and a designation under the LAC rules, would an AI need to comply with the LAC rules. Again, there's nothing automatic in the rules. Instead, it depends on case-by-case work. And specifically for smaller AIs, above the 100, just near but above the 150 billion threshold, LAC requirements could be reduced by up to 50% of the resolution component ratio if the AI's resolution strategy envisage a partial property transfer or a whole bank transfer. And this is likely to be most relevant for smaller AIs. On timeline, all non-Chinese GSIBs are working to comply with the FSB's TLAC term sheet deadline of 2019. Therefore, under the rules, they can be required to meet LAC requirements 3 months after classification, thereby facilitating compliance with the compliance of their relevant Hong Kong operations with the FSB's TLAC 2019 timeline. All other AIs will have 24 months following classification. The Resolution Authority is prioritising DSIBs in its resolution planning bilateral work and in its LAC classification processes. The Resolution Authority current intention is that DSIBs will be classified around the 1st of January 2020, so that they would have to start meeting LAC requirements no earlier than the 1st of January 2022 onwards. And I'd like to emphasise that's the earliest point in which we're planning that any DSIB in Hong Kong would be required to meet the LAC rules. Of course, the MA has the flexibility to take into account firm-specific circumstances, whether that is to provide more time for that institution to issue the LAC requirement, taking into account the market circumstances at the time, and that will be done on a case-by-case basis. All of the LAC rules are imposed only on a case-by-case basis. So there's flexibility there for the MA to take into account firm-specific circumstances. This date is the very earliest any AI besides the non-Chinese GSIBs will be required to meet LAC requirements in Hong Kong. However, to provide clarity to the market for all non-DSIBs, not just those below the 300 billion Hong Kong dollar mark, the Resolution Authority's intention is to stagger the classification of such entities so that the very earliest classification date for AIs that are not DSIBs will be the 1st of July 2020, with LAC requirements therefore needing to be met no earlier than the 1st of July 2022. In practice, the larger AIs in this non-DSIB group will be engaged in these bilateral discussions with the Resolution Authority well before those AIs that are only just above the 150 billion threshold. So in practice, they're likely to have more time before classification and more time to meet the LAC requirements. So I hope that we've sort of heard the timing points, and I think we wanted to provide better clarity on our planning assumptions and that clarification on timing.
OK，因為時間關係咧，我想都俾。
Well, since the deputations are here, I'd like to throw the floor open for questions first. The first member is Mr. James Toh, please. Chairman. I beg your pardon. I meant to conduct a site visit at 10:30, but I'm very concerned about this rule, and I welcome all the deputations here. I feel a little bit surprised for the small and medium-sized banks they feel very strongly about it. I think that you counter your speech in very moderate terms. I hope that you shouldn't be so soft in your wordings. I'm not saying that you should act like me. We're opposition party. We would adopt a different tone, more strong tone. I know what you're talking about. I know where you're coming from. Sometimes I feel that from the MA's point of view, it is very simple. They are merely looking at the compliance perspective. They're looking at the governance angle. They are being reasonable. They are talking about case by case treatment. They are telling us all of this. But honestly, as a legislator, I've been a legislator for 20 odd years. I know every single aspect of the government's mindset. I'm not saying for 1 minute that they are bad guys, but you have to tell them what you think. Now, it was said that there are certain parts that fall within the code of practice. I know where things fall into. When we drafted the FIRO, it was said that there are certain banks that are too big to fail, and we have to do something about the situation. The focus, I think, at that time was the important banks that would have implications on the world, on Hong Kong. We would deal with them as a priority. But now you are extending this and cover all these small banks. Now, no offense. They are small banks, but you are covering them in this exercise. I think you are driving them really out of existence, more or less. When the FIRO was endorsed, this is not what we had in mind. Now, of course, if you say that all of them taken together represent 1% or maybe less, all of them put together would represent 10 or more percent. If they go under altogether, it would have systemic risk. Then if this is the case, then you have to do something about it. You have to make provision for the lack requirement. This is risk-based, of course. If you talk about the code of practice, at the end of the day, they would say that this is reasonable, and you think this is unreasonable. What are you going to do? Are you going to go for judicial review? It would be too late for you to talk about this at that stage. I don't hold any of the of your stocks. I must make my declaration. No bank holdings. If the code of practice is not reasonable, and if you are making them afraid, then I would be the first one to object to this rule. Because you have to get everything settled first. Of course, they wouldn't say that they are teetering on the brink of collapse. They wouldn't say that, but if they become non-viable, there would be further injection. But honestly, they have to comply all these CAR ratio, and it is very safe for them. It is safer than most banks in the world. Now, on the one hand, you say that they are very safe, but on the other hand, that you're saying that they might be at risk. I find this really surprising. So first of all, Chairman, all these points of view, I hope that the Hong Kong MA or the Hong Kong government will respond to them blow by blow in writing. And I hope that you would make available copies to these deputations for them to come back on them. So I'm not inciting you to react against the Hong Kong MA, but you have a lot of staff members and you have a lot of customers. I mean, BOC is a large bank. I mean, you are catering a lot of customers who don't want to deal with the large banks. We are being reasonable, and we have a lot of pro-establishment members here. They are all reasonable. They understand your plight. But be more direct, be more straightforward, be more upfront. I've read these submissions. You're so indirect. 24 months? I mean, you couch things in so indirect terms. I know that you wouldn't say go so far as to say that you would be put at risk. But they may impose requirements that they consider reasonable, and you don't consider reasonable. What are you going to do next? Will you be passing all the costs to the small depositors, or what are you going to do? So we have to defend Hong Kong against instability. It is important. But I heard, after hearing the deputations, I'm wondering whether you've told the Hong Kong MA if you've been putting up with it until today. Then I find it very surprising. I'm wondering whether they have talking to one another before the rules came to LegCo. Are you just putting up with it, or are they misleading us? I really don't understand why. You unbosom yourself today like this. Chairman, being loud doesn't mean being aggressive. I'm just merely concerned about the whole thing. I think we have to find out the balance that we have to strike. All right. Response from the administration, Mr. To's concerns. Any response there, please?
And thank you, Mr. To. I think one of the objectives for the HKMA today was to ensure that there was a consultation outstanding on the 150 billion threshold to inform the discussion here today on the rules. We thought it was very important to enable LegCo members to assess the rules, but also to provide an opportunity for banking sector representatives to understand how the MA planned to apply the rules before the rules were finalised. So we think it's very important to be transparent about how we plan to take forward our work, and we look forward to the consultation responses on the code of practice and the 150 billion threshold, which is currently not a finalised or set number. I think what we want to say today is that we are listening to the feedback that we are receiving from banking sector representatives, and we will consider the feedback that we receive before the end of the consultation process.
Mr. Wright， 我想講咧就係最緊要咧係要。
I think the most important thing is to address one of Mr. To's concerns. You want the councils to endorse the LAC rules, but the code of practice consultation will not be completed until December. There is a bit of a time lag there in between. Once the rules are endorsed, will you keep 150 billion or not? We will have no idea of knowing. We have no way of knowing. And Mr. To's point is that if you don't make things clear, if you don't make clear about the direction, how you take it forward, it would be hard for him to endorse this LAC rule. Now, this is what where his concern lies. I won't endorse this rule. I won't. I understand, Mr. White. I know that you try to reiterate the process. I know that you are trying to explain the process. But Mr. To is saying that this will not come about until December. Well, Chairman, I think they ought to go back and mull over the issue before we endorse the rules. As LegCo member, I'm not merely considering the banking interests. I think we have to strike a balance. Is this the right time for us to endorse the rules? From what they say, I don't think I can bring myself to endorse the rules. That's the point. Mr. White, have you got any idea that can address this particular point?
So I guess I'd go back to the primary legislation, the FIRO. And the scope of the FIRO is not limited to banks above 150 billion in assets. Instead, as considered by LegCo, the FIRO applies to all AIs and all financial institutions within the scope of the FIRO. So in that sense, what we're providing here today and what the LAC rules under Section 19 of the FIRO are allowed to encompass are all AIs. What we're setting here today is a set of priorities that define a subset, a smaller group of institutions within what the FIRO provisions already allow as within scope, proposed at least under the consultation that's currently ongoing, as proposed to be most likely subject to the LAC rules. Again, not on an automatic basis, on a case-by-case basis, subject to formal decisions that will follow, having assessed each individual firm's circumstance. So I think that's a really important point. The legislation is broader than what we're proposing here today, and we think this reflects the MA's judgment of those firms that are most likely to present a risk if they fail out and enter liquidation. Mr. Chairman, I have two more points I wanted to respond to in the deputations very briefly. And one with respect to the Chinese GSIB operations in Hong Kong. I think we can very clearly state that as part of home and host cross-border resolution planning best practice, in making classifications and imposing any LAC requirements in relation to any subsidiary in Hong Kong of a Chinese GSIB, and indeed of any subsidiary of any bank headquartered outside of Hong Kong, the Resolution Authority will cooperate and coordinate with the relevant home authorities. So I can really, that's a core part of how we take the implementation of any resolution planning for a cross-border bank forward. We will always be engaging and are actively engaging in cooperation with home authorities. And I can reassure the members here that in setting LAC requirements for any foreign bank's operations, we will do that in a coordinated way with the home authorities.
Okay.
And finally, on the minimum debt requirements point, I'd just like to clarify. The Code of Practice, we recognise that meeting that requirement may create challenges, particularly for some small firms with limited debt issuance track record. To meet, so in such cases, the Resolution Authority would therefore consider whether it is appropriate to allow a longer implementation timeline to take into account those circumstances for small firms. But specifically on the Code of Practice proposes that it is only instruments that are accounted for as liabilities and not those accounted for as equity that should count towards minimum debt requirements. However, the Resolution Authority is actively considering the details of this issue based on the ongoing dialogue with industry, and we'd welcome consultation feedback on this point. I think we're particularly open to the views expressed here today and the consultation feedback on this point in specifically. So we're, I think, very happy to take that on board and consider how we can reflect it as part of the final Code of Practice. So I'd stop there.
Okay. Robert, a little bit, right?
Yes, thank you. So in relation to Mr. Toe's question, and if I correctly understood some of the points coming out of the deputation, I think the concern was raised that small and medium-sized banks would be subject to LAC requirements, notwithstanding that they are not systemic and would not pose a risk to financial stability. So I just think it might be useful to clarify that the FIRO, the primary legislation, only allows the resolution regime to apply where the failure of a bank would be expected to pose a risk to financial stability. In the LAC rules, the HKMA does not have, the resolution authority will not have the unfettered discretion to classify entities as resolution entities or material subsidiaries. It is only those entities for which the resolution planning indicates that stabilization options under the FIRO are required in order to protect financial stability. So the HKMA's considered view is that a 150 billion threshold is the correct indicative threshold from which to start. As my colleague has already said, we are happy to consider a longer implementation timeline for banks under a threshold of 300 billion. This would allow them longer to prepare to meet the requirements, but in addition would also provide these smaller banks with the opportunity to demonstrate that should they fail, they would not pose any risk to financial stability, and so they could be safely allowed to go into insolvency. The bottom line is that any bank that is not anticipated to pose a risk to financial stability on failure will not be subject to LAC requirements.
Okay. 我都讀一讀我哋其
I will read out the names of members who would like to ask questions. Chen Kim Po, Kenneth Leung, Christopher Zhang, and Lo Wai Kwok. James Toh was in high spirit. I did not stop him. I think perhaps each member will have 6 minutes. Mr. Chen Kim Po? Let me first declare that I am an ED of Bank of East Asia. Well, the rules and the ordinance is there to maintain stability so that when banks fail, taxpayers don't have to pay for that. However, these requirements will bring unnecessary increase in operating costs, which undermines the capabilities of banks, and in turn increase the risk of non-viability of Hong Kong. We are an international financial city. We should not use the most stringent approach. US used GSIP, but here you said you will cover GSIP and DSIP, and it will cover small and medium banks. When it comes to implementation, it says that by 2022 it will start, but that's not the case for Singapore. You only give them 3 months or 6 months, and you look like you have shown mercy. But if you're going to kill someone, it doesn't really matter you're going to kill them 3 months later or 6 months later. You have to consider whether that will have a significant impact on banks. I don't see any GSIP banks here. Perhaps it shows that they don't have any problems. However, for small and medium-sized banks, it will have a huge impact on them. Their concern is reasonable. As Mr. To said, that if these rules are endorsed, well, the code is quite stringent. It will have a significant impact on them. And I'm also from the similar sector. I will not openly say that we're having a tough time. The Hong Kong MA said that they have flexibility when it comes to implementation. I hope they will give sufficient flexibility. When it comes to the resolution entity, shouldn't it just be GSIP, just like in the US? So you will only cover multi-corporational banks. But what about timetable? Isn't it too rushed? Should we be the first in the world? Why don't we compare ourselves with our competitors? Say, for example, Singapore, which hasn't put that in place. What about the impact on banks? If you cause a drop in profitability by a few percent or double digit, then it is not fair. Each place is different. Each place has different requirements, and the banks are different. So please do not start with the most stringent requirements. You're only going to stifle the sector and the survival of smaller institutions. We see that Hong Kong's property market and stock market have plummeted. The situation is completely different from the last crisis in terms of our economic growth and interest rate. So I'd like to ask representatives. In the administration's paper, it says that if you are to meet lack requirement, well, for the debt cost, it should be like 4%. That was something done in 2017. It says that according to information supplied to them, that well, when it comes to the weighted risk of T2 is about 4%. Do you think that in a few years' time it will still be 4%? Can you tell? Can you hazard a guess as to what the interest rate will be? I'm asking the deputations. You don't have to be afraid of the Hong Kong MA. I see from the information paper that it's 4%. Mr. Wang from Dah Sing Bank. Thank you for the question. We think that regarding this interest rate, it seems to be simplistic. Well, there is an increasing trend when it comes to interest rate. If by 2022 or 2023 we have to issue debt instruments, we have to put in place bail-in, we have to meet all these requirements. Well, there is no there is nothing that we can use to directly compare it. 4% is on the low side. I think it should lean towards the 5% side. Anyway, we have to take into account conditions of the market in the future as well as the timetable. Well, the impact on small and medium banks, their profitability, the ability to provide services to SMEs and to the community. The increase of lag liability. We suggest that it should be done in a gradual manner, say 1.5 times or 2 times for small medium banks, starting point of 1.5 times of the core capital requirement. I think for our capital sufficiency, it stands at about 18% at the moment. If it's to be increased by 1.5 times, using a lag requirement as the basis of calculation, we think risk-weighted assets, the ratio is about 21%. So we have to increase debt to about 3% of our assets. Keeping in mind like 2022 or 2023, the consolidated asset or liabilities, the lag liability is not small. We're talking about billions of dollars or over 1 or 2, 10 or 20 billion dollars. This is not a small sum. For small, medium banks, they make every year about 1 or 2 billion dollars. If there is a requirement of issuance of debt and cost, we're talking about an implication of billions of dollars. We made our submission to the Hong Kong MA because we see that the impact to us and the implication on cost is significant. We need more flexibility. We need more time. But if it is a rule and it is set, and if it's a code that is implemented, and the threshold is set at $150 billion, and we only have about 2 or 3 years to make the adjustments, it's not ideal. For locally incorporated banks, you said that $150 billion as a starting point is relating to the rate. We're talking about the 90. The business of banks with assets of $150 billion, about 90% of the institutions. We're talking about 90% of the assets. But these should only cover G-SIBs or D-SIB. We do think that the implication is far and far-reaching. I'll wait for my second round. Second person is Mr. Kenneth Leung. I have heard from deputations and I have 3 points to make. First, as mentioned by the Hong Kong MA, there is flexibility and it will be mentioned in the code of practice. But the code will be implemented after the rules, and if we don't talk about this, then it would be too late. If there is any objection, it will be for the sector to liaise with the Hong Kong MA. Yes, I can see that The Hong Kong MA has the power to apply lag rules to all FIs. You will take into account risk and the actual situation when you decide on the threshold. I heard from Mr. White that once every 3 to 5 years they will review the threshold. The threshold is very important. Now it's set at $150 billion of total asset. Perhaps in 3 years, the figure will be different. We're concerned whether 150 billion is too risk averse an estimate. I've heard from other members that there is actually nothing substantial in the rules. Everything is in the code.
I don't understand why the government would not put this threshold in the rules, because then you have to come back to LegCo if you want to change it. It may take a bit of time, but I think if you put it in Schedule 5, if the threshold is there in Schedule 5, it would be more practicable. It would set our mind at ease. You can put this in Schedule 5, 150 billion, 200 billion, 300 billion, whatever it is. That's point number one. Second, about the flexibility. Is it only 24 months? I heard that if some AIs require more time for compliance, they will allow them more time. So this 24 months, is it a requirement under the law or under the code of practice? Is it likely that the 24 will become 36 or 48 months or whatever, depending on the risks of the bank? Third, I think the issuance of LAC instruments would incur some costs for the banks. One of them would be the interest. Some mentioned the projection of 4, 5, 6%. There is no knowing. The interest is tax deductible out of the 16.5%. Other than the interest costs, there is also the issuance costs and marketing costs and compliance costs. There would be a whole host of different costs involved as far as the banks are concerned. So have the banks assessed for every $100 million LAC instruments under different interest rate scenario, how much would that be for the banks in terms of costs? I'm not finished yet. One more thing. During the last meeting, a lot of members mentioned that who will be the target investors for these LAC instruments. If the banks would take up these LAC instruments among themselves, there would be a systemic risk. Is it forbidden? No, the insurance companies or the banks will not be allowed to buy. What about banks and insurance companies from other jurisdictions? Can they hold these LAC instruments? No. Right? If they're not allowed, who will be the investors? The retail investors, well, the small investors will be disallowed. So I think there will be a big problem there. I think 24 months, 36 or 48 months, and this is something that Hong Kong MA should consider carefully. Some of the questions can be addressed by the deputations. I think some other questions the Hong Kong MA can address, but I hope that you will allow the administration and the Hong Kong MA to give us a paper setting out their reply in detail. I'm wondering whether the threshold cannot be written into the rules. All right, deputations, anyone cares to mention, to reply to Mr. Leung for $100 million worth of instrument? How much would that be in terms of costs? Yes, Mr. Wong. Chairman. The issuance cost, marketing costs, compliance costs, now these are really realistic costs. For $100 million or any other amount of issuance. We're not talking about a single rate. For the small and medium-sized banks, they are put in a very bad disadvantage because we have to go on road shows. We have to go for credit rating. Whatever the amount, we will bear similar costs. The larger the amount, of course, will incur more costs. $100 million will incur a cost of hundreds of thousands of dollars or $1 million. Now, the market is not mature. We have to do more. The pool of investors is limited, and we need to get rating. We need to do a lot of other activities, and also compliance is something that we have to bear in mind. The cost would definitely go up. Thanks very much, Mr. Wong. Mr. Chen Kinpo and Mr. Kenneth Leung raised some points. I'm wondering whether the administration would like to respond. The resolution entity, the timeline, and also the 99% mentioned by the deputations, the issuing costs, and also Mr. Leung asked why the specific requirements under COP cannot be written into the rules, flexibility, and so on. A whole host of questions there. Right, if I may respond to Mr. Kenneth Leung. Thanks very much, Mr. Leung, for your comments. Mr. Leung asked whether the COP can be put under the rules. I think that that might present some difficulties. This resolution regime, as I mentioned, is something that we have to look at the situation on a case-by-case basis. If the COP were to be put into the rules, then there will be no flexibility. No, I'd like to clarify. I merely want the threshold put under the rules, not the whole COP. If you want to change the threshold, you have to come back to the council. That's it. What the two gentlemen of the Hong Kong MA have already clarified about the threshold. The consultation has not come to an end. This is not cast in concrete. And also the threshold represents a starting point. They would look at their own situation with this as a starting point. This is not the final figure for which the lacquer requirement will be imposed. It would depend on the situation. Perhaps I defer to my MA colleagues.
I would echo the same point. I think that's a key point. We've emphasized that the rules provide a framework, and the reason that, and there's nothing automatic in the rules in setting LAC requirements. That's very important because the risk of having automatic requirements set out in the rules mean that it would impose a one-size-fits-all approach, not based on individual firm circumstances. So we want to be, that's a key priority for the MA, is to be able to not take one approach on resolution planning for all firms, regardless of their starting point. Instead, the flexibility to set different resolution strategies, for example, consider partial transfer or transfer strategies which provide a 50% reduction in the resolution component requirement for small banks. That's a really good example of how we can use our judgment to take account of firm circumstances. If there's a risk that if everything was hardwired into the rules, it would be more difficult to do that, and the cost could be disproportionately felt by banks with different types of business models. So that's one of our key objectives, and the balance we're trying to strike is to provide some clarity in the code of practice, to provide some guidance, but so that it facilitates the application of judgment so that we can tailor an approach, take into account firm-specific circumstances. Key point of that is, on a case-by-case basis, we can consider implementation timelines. If individual firms face evidenceable challenges in meeting the requirements, it's open to the MA under the rules to take that into account. The rules provide powers to the MA to vary certain requirements to take into account for certain firm-specific circumstances. So the 24-month question, that is a hard requirement on classification, but the date of classification is subject to the MA's judgment and based on case-by-case approach. So that reflective of the framework that the rules provide. And again, there's nothing in the rules that sets out a minimum 150 billion asset threshold. Instead, the rules apply to all AIs. What we're trying to provide in the Code of Practice, draft Code of Practice currently under consultation, is facilitate industry feedback on the MA's current judgment of where the line should be. We are open to industry feedback on that point. Maybe I'll ask my colleague, Mr. Probert, to talk about the debt issuance and our thinking around the cost of that and how we factor that into the consultation process.
Sure. Thank you. So on the cost, as identified, we modelled on the basis of a 4% number. Just to clarify, this number was based on a quantitative information survey returns that we received from industry, which of course at the time necessarily reflected historical data. None of us can tell with perfect accuracy what costs will be in the future. What we did to come up with that 4% number was take the weighted average of the responses we got from locally incorporated licensed banks and actually round it up a bit to ensure that we were being appropriately conservative. Of course, going forward, no one expects that that will necessarily be the cost of LAC debt instruments indefinitely, and this is exactly where the type of flexibility that my colleague has just been talking about will come in so useful. So both around the ability of the resolution authority when developing resolution plans and resolution strategies to engage with individual firms on a bilateral basis in detail, and then also around the setting of an implementation timeline. So the rules provide for 24 months after classification, but also my colleague has already explained that leaving to one side for the moment non-Chinese GSIBs, no DSIBs will have to meet LAC requirements any earlier than 1st Jan 2022. No non-DSIBs will have to meet any LAC requirements earlier than 1 July 2022. And for firms below 300 billion, we'd consider further extending it. And just to re-emphasize, these are the earliest possible dates. So in terms of classifying firms and requiring LAC requirements to be met, this, because of the flexibility provided by the rules, this can be done on a case-by-case basis, and if necessary, phased appropriately should costs and market conditions deteriorate.
OK， 我諗都要俾。
All right, then I think I have to call upon other members to speak. Mr. Christopher Zhang. Chairman, thank you. These FI resolution rules are in fact there to cater for the situation where the large banks too large to fail. If they fail, we can deal with the aftermath. Now, I was involved in the panel discussion. We also discussed the resolution regime. Today, what is presented to us is that the LAC threshold is $150 billion, and it seems like all the banks would be caught from this figure if the market share is only 0.6%, or if they have 1% of the total asset, they would also be caught by this LAC requirement. And a lot of members have already expressed their dissatisfaction about the stringent approach and also the onerous requirement that this will impose. Now, for the small banks, it doesn't mean that they present a greater risk. Generally, the banks do have the 18% CAR ratio, and if these banks were to be subject to the LAC requirements, the percentage would go up to 21% or more. And there is a gap of 3.3 to 3.8%, and as a result, they have to issue debt instruments to the tune of $750 million in the market. $750 million to $2 billion, in fact, debt instrument to be issued that would have a great bearing on the banks. I heard from the Hong Kong MA that this is only a framework, But I think that if this framework is put in place, and then we discuss the details of the individual banks, it would be very hard to change anything at all at that stage, because once the framework is in place, it would be set in stone, and it would be hard for us to change anything at all. And if we can't even change the government's attitude at that time. In 1987, the Securities and Futures Ordinance was brought in. They told us that it would not pose any problems to the small brokers. Now we had 30% previously. Now we have a market share of 7%. I think the details, the devil is in the details.
我就係希望咧。
I hope that Hong Kong MA will clearly hear your views and bear in mind the healthy development of the sector. Our members have already gone over the justifications. Banks have expressed their valid points. This will have, but they have done a lot to contribute to the sustained development of our banking and financial system. If you don't change the $150 billion, I don't know the possibility that I will try to right this wrong. Shall we hear from the administration first? Mr. White or Ms. Zhang?
I guess reminding all members today that we are looking at the rules rather than the draft code of practice in which the 150 billion threshold is set out for industry consultation. And the rules themselves cover all AIs, like the FIRO itself. And in terms of sort of the point about LAC rules providing a framework, again, this is consistent with the intention in the primary legislation to not specify set requirements, because it's very important that the resolution planning process is done on a case-by-case basis. So under the primary legislation, the individual resolution authorities are provided powers to engage in resolution planning on individual firms to set resolution strategies, and there isn't anything in the primary that says what that strategy should be or what the requirements should be, because it's designed to be able to take account of firm-specific circumstances. Exactly the same way, the LAC rules are designed to take account of firm-specific circumstances. So I think we're very much consistent in terms of the proposed approach in the LAC rules. What we're trying to do in the draft code of practice is provide a little extra clarity about how that judgment would be applied by the MA. And we look forward to consultation feedback. Today, I think we've set out the thinking that has informed the MA's judgment about why the 150 billion threshold is appropriate, but we are very alive to the feedback that we've heard here today, and we will certainly take it into account as part of the consultation process, as well as the written responses that we receive before the 3rd of December.
但係我想講翻咧，我而家聽。
I would like to say that 3 or 4 members at least have said that if the COP is not pegged to the rules, they don't rule the possibility that the rules will be vetoed. I would like to make that clear. Perhaps we will hear from Mr. Wai Kwok first. Thank you. Mr. James Toh is not here. When he spoke, well, I will not reject what the person says simply because it's said by that person. But he's been emphasizing on the loyalists and non-loyalists. I think that is unnecessary. But I do think that this is an important issue to the development of our financial system. It also has an impact on livelihood issues, and we just try to be objective. We don't have to bring partisan issue into this. I think we have seen eye to eye on a number of issues regardless of our political affiliation. Every time we have deputations from the business sector or from the commercial sector, they have been very objective in their views. I'm afraid that sometimes even it's something that they feel very strongly about, they are very calm when expressing these views. whereas for some other issues, before people come to public hearing, they would gather downstairs, and in some public hearings, some deputations will make up names that are euphemisms of swear words. Chairperson, as a result, find it difficult to decide whether to say their names. Well, I was late, but I have been listening to your views. I heard a common concern, and indeed a very big concern. Hong Kong is an international financial center. Regarding compliance and international requirements, we have to abide by them and have to meet them. And I heard some deputations that Hong Kong has done more than we're required to. Well, SMEs are very important partners to a lot of banks. Some local major banks claim to serve Hong Kong people, but they don't welcome SMEs. We have heard a lot of complaints that SMEs find it difficult to open an account. I don't mean to digress, but I want to say that if there is an increase in compliance costs, then Hong Kong people and SMEs will suffer in the end. We just pass this framework and these rules without good reasons. It means that we have issued a blank check. Yes, they said it won't be an across-the-board approach, and we will do it by case-by-case basis. That's scary, because if you don't tell us the criteria and the factors, how you draw the line, say for example regarding the threshold, that it will be difficult for us to explain to SMEs who need banking services if we give you the blank check. I don't know what is the best solution. Perhaps I will leave it to the Hong Kong MA and the administration to work it out. You know about our difficulties. Yes, we are aware that we need to comply with rules, but deputations have made very valid points. There are subsidiaries or branches of holding companies in Hong Kong, and the parent company may be in a different economy. And in the country where the parent bank is domiciled, say for example in emerging market economies, the GSIP is subject to a more lax implementation table. If you don't make everything clear to the LegCo, how are we supposed to endorse the framework? I think it's for the chairman to decide. I would like to also hear from the administration. We have banking representatives. If you have more complaints, please tell us. I'm sure the chairman will give you time to do that. Mr. White, you would like to say first?
I'll just respond quickly to a few of the points. On the 150 billion threshold, we've talked today about what's informed the setting of that threshold for consultation, and I hope the sharing of our views has at least explained the factors that we're trying to consider from the perspective of the MA. And in particular, we're trying to balance private interests and recognise the costs, and we have spent a lot of time analysing how the LAC requirements would impact individual institutions. But we're trying to balance those costs against the interests of depositors and the wider financial stability interests here for the Hong Kong economy overall. So the current threshold is an expression of our current thinking. However, I want to reassure members and the banks that are here today that we will listen to the feedback that we've received. And certainly, I can reassure them as well that the consultation threshold has been discussed at the highest levels within the HKMA. But equally, this feedback will be discussed again at the highest level within the HKMA in considering the threshold as part of the consultation process. And I can reassure members and the banks here that we will take their feedback seriously in considering what is the appropriate final threshold after the consultation process. So I think that's I want to make clear that we will take the feedback into account in considering what the appropriate final threshold should be, and we won't ignore the points that have been raised here today. Now, I'd like to ask my colleague very briefly to touch on the point about international comparison. Some comments have been made that Hong Kong is sort of front-running, and maybe I'll just provide a little bit of context as to the global effort that is currently ongoing to set LAC requirements for large and small banks.
Okay, Robert.
So in relation to that, actually, I would like to draw attention to the response that was submitted to the question coming out of the previous subcommittee meeting, asking for a comparison of progress on the timeline, the implementation of LAC requirements in Hong Kong compared to other major international financial markets. And we were asked to comment on the United States, the United Kingdom, Singapore, Japan, and the mainland. Just to very quickly go through those one at a time. So in the US, final TLAC requirements will come into force from 1st January 2019, so considerably ahead of timing in Hong Kong. In the UK, UK GSIBs will be required to meet minimum loss-absorbing capacity requirements from 1st Jan 2019, with smaller firms being required to start meeting requirements from 1st Jan 2020, again ahead of anything we are proposing here. In Singapore, they have not yet imposed TLAC requirements, but eligibility criteria for bail-in instruments were set out in regulations that have just been published in October this year. In China, as has been pointed out, the imposition of TLAC requirements remains pending, and the FSB TLAC term sheet does not require Chinese GSIBs to meet TLAC requirements until 1st Jan 2025. But it's important to note there is a caveat to that, in that that timeline will be brought forward if the corporate debt to GDP ratio in China exceeds 55% before the end of 2020. And this ratio was close to 50% at the end of 2017, implying that that deadline of 2025 on that mechanism is very likely to come forward. And in Japan, the TLAC requirements are being phased in from 31st of March 2019. We were also asked to consider this was including these jurisdictions. So you'll have seen in the administration's response, it was also set out that in Switzerland, obviously another major financial centre, final loss absorbency requirements were published in October 2015, being phased in up until the end of 2019. So I think on the basis of those comparisons, what we see is that actually Hong Kong is not front-running other jurisdictions. And if anything, certainly in reference to some of those, we're coming a little bit behind. I think the perception might have arisen that we are front-running because what we've been trying to do is to engage at a very early stage in the process in order to exactly allow for appropriate consultation and then allow industry a lengthy lead-in and preparation time. So the first public engagement on this policy was the publication of the consultation paper in January this year. And that is sort of 4+ years ahead of the time in which we're now talking about LAC requirements actually needing to be met by AIs in Hong Kong. And I think it might be that it's the early engagement and the fact that we are aiming to give industry a long lead-in time that perhaps has created the perception that we're front-running other jurisdictions. But I hope, as the evidence I've just set out demonstrates, we don't think that that is the case.
OK，我
I would like to ask members first. If you have questions for banking representatives, If you don't have any other questions, I will ask deputations to leave first before we have a meeting with the administration. So, do you have any other questions? Banking sector would like to say, Ms. Yim from Bank of China. Bank of China is a DSIP. Parent bank is China. As I said, that in relation to cross-border cooperation and discussion, it is very important. Starting from last year, we were aware of the situation and we directly communicated with the parent bank. For PRC, BOC, there was a restructuring. We tried to understand in the process what in the resolution requirements is about. It is still a very preliminary stage.
Well, some members asked whether they can buy TLAC between the banks. In theory, yes, but that will reduce your capital because there will be a capital deduction as a result. So there are a whole host of questions. The parent company will not start until 2025, and we do need to have a close liaison with the parent company. And we may affect the parent company. In mainland China, the timetable is they're looking at 2025. As Mr. White said, maybe 2023, 2024, but there's still a question mark there. We're not sure exactly when. So there are a lot of uncertainties there. And you're asking the banks to plan ahead to comply with LAC in the midst of uncertainties. And since January, we've been in discussion with Hong Kong MA because the DSIP will have a systemic risk to the entire system. But I think that there is a need for cross-boundary communication. Without this, it would cause confusion. It would cause difficulties. In the COP, there is an assumption that DSIP will go ahead, and I think there ought to be good discussion between all the parties. We told this to the Hong Kong MA many times, and we need to do a good job in the way of communication. If it has to be advanced, I really appreciate that the threshold is on the basis of GDP ratio and so on. China is close to the FSB trigger for TLAC to be triggered, but there is a bit of a gap. At the moment, will China be able to grow annually to reach the ratio? There is a question mark there. So if the parent company under China jurisdiction were to implement this in 2023, 24, BOCHK will follow suit. But do we have to plan for the issuance of TLAC ahead of time so soon? So I hope that the MA or members would take this into consideration, in particular in terms of implementation. All right, anybody else from the deputations? Yes, Mr. Chen, second round. Thank you. Over the past 20, 30 years, the Hong Kong MA did a marvelous job. We didn't experience any problems with the banks during the financial crisis, and there are very stringent requirements. But in recent years, the banks have really high compliance costs. For a small, medium-sized bank, and they have to have a large team to do compliance. We have a high CAR ratio, and this will increase the costs of the banks, but that will ensure that the banks will not experience any difficulties. But for the LAC requirement, it would, if done improperly, it would undermine the profitability of the bank. and it would cause problems for the banks. So this LAC requirement is not the same as the CAR ratio requirement. If you do not do this properly, you may cause unintended consequences. So I think you have to let go of these small and medium-sized banks. You have to you ought to restrict yourselves to the DSIP and GSIP group, and as a result, we are not going to have too many debt instruments being issued. If they have to issue loads of debt instruments, there will be problems to the market. And also, you have to consider the costs that the banks will have to incur, and also their profitability. And the risks may not be proportional to the cost. Third, the implementation timetable. You have to have regard to the needs of the banks. I know that the government denies that we are front-running other jurisdictions. I think as long as you're doing a good job, you don't have to be number one. I think we have to maintain a competitiveness. Now, I'd like to ask the deputations whether they have anything else to say. Or anything else? Mr. Chen said that you invited to air any views that he hasn't quite mentioned. Mr. Wang. Chairman, thank you. I'd like to respond to Mr. White from the MA. And also Robert mentioned this. That is by comparison with the international scene. And there are other jurisdictions that are ahead of us. And we are given a timetable regarding all the different jurisdictions, including China. I'd like to make a clarification here. For the US and European countries, Japan, some of the leading countries, in terms of the LAC requirements, they are targeting at GSIP and BSIP and DSIP. For Japan, the three leading banks, and also the largest securities company, the four, we have to measure up to this requirement in 2019. And for the small and medium-sized institutions, they're outside the LAC requirements. The same can be said about the US, that only the 8 leading banks are covered. In October, the US implements the law enacted in May by the Congress. Any banks below $700 billion, there will be relaxation in terms of their regulation. And so they're covering 8 leading banks there in the US. I'd like to say this by way of clarification. In Singapore, it was said that there is no LAC requirements. In fact, in Asian jurisdictions, there are no such LAC requirements for the non-DSIP banks. Thank you. All right, other members? Yes, one more. BEA, Mr. Tong. Chairman, thank you. Chairman, the LAC requirements would bring about extra costs for the banks. Certainly, LAC instruments will cost more than anything else. And also, if so many banks are issuing LAC papers in the market, the supply and demand situation means that the financing costs will go up. Now, that's because of the timing, the result of the tight timing. And I hope that the Hong Kong MA would reconsider this. Perhaps different banks would be subject to a different timetable or different starting point. Now, for a bank, can we allow the Basel III buffer? We may start in 2022. And we can spread this over 3 to 4 years for us to comply with the requirement. And that way, when LAC instruments are issued, we don't have to issue them all in one go. We can spread them over a couple of years. And the interest can be normalized. Anybody else from the banking sector? All right, members. Oh, yes, please. Dr. Lo Wai Kwok, Chairman. I've got a question for the administration and the MA. Today, the deputations are very civilized, but we fully appreciate their concerns and their challenges. At the end of the day, it is likely that the extra costs may be passed on to the customers, not least the SMEs. Now, how did you go about doing the consultation? Isn't it right for us to have got all these issues sorted out before the rules are presented to us? Shouldn't it be the case that the banking sector's unease should have been eased? Yes, Madam Zhang. Thanks very much for your comment, Dr. Kwok. Dr. Lo, as Chairman clarified at the beginning, we are scrutinizing the rules. And for these rules, we've done 2 rounds of consultation. The first round was at the beginning of this year. There was a public consultation. When we had the draft, the Hong Kong MA also approached the sector, the industry, for a second round of consultation. I think members are basically more concerned about the threshold. At this meeting, we have explained more than once that the threshold is put in the COP. This $150 billion requirement is only a draft figure, which is subject to consultation, which will end by the end of the year. As the MA said, all the feedback today and in the run-up to the end of the consultation would be considered before deciding on the threshold. So this threshold of $150 billion represents the starting point. It doesn't mean to say that if you go beyond the $150 billion, you would automatically fall into this LAC requirement, or you have to double the capital requirement ratio. That's what I like to stress. Now, the consultation is not over yet regarding the code of practice. It will not end until the end of the year. In the recent past, the Hong Kong MA has been in touch with the banking sector. They've had a lot of some meetings, listening to what they have to say, and all this feedback today would enable members to understand what we are trying to do. And after today's meeting, we're only too delighted to make available replies to members, all our replies. Dr. Lo, Chairman, I'm not happy with the reply at all. I'm sure the administration would have thought that if you ask us to endorse the framework, then we're signing you a blank check. We're not going to have any say over what's going to happen next after the framework has been endorsed. They should have anticipated the difficulties. Now, after the consultation period, isn't it right for us to endorse the framework after the consultation period is over? Well, I heard really overwhelming views that between the rules and the COP, there's a lack of any link. And this is something that members are concerned about. Like Mr. James To and Mr. Kenneth Leung said a few moments ago, you should tell us how the two things can be somehow linked together. And that would inspire confidence in us to endorse the rules as they are. Today, after listening to the deputations, we should be able to move on to the clause-by-clause scrutiny, but with so much adverse comments, it would be hard for us to go into the clause-by-clause scrutiny. Like Madam Zhang said, she would be responding to members' views from Mr. James Doe, Mr. Kenneth Leung, who in particular said that the threshold of $150 billion or whatever amount should be put under the rules, and then we can proceed to clause by clause. Because without this response, it would be well nigh impossible for me to go into clause by clause. So today I'm not going to do the clause by clause scrutiny.
What I'd like to say is that our legal advisor and the subcommittee have asked questions on the last occasion. I would like to give you a chance to cover all that first. We would focus on how to resolve the problems raised today. And after we have got satisfactory answers, then we will move on to clause by clause. What do you think about my suggestion? You all agree? Any other views? If not, perhaps I will first release the deputations. Thank you very much for coming today. You may leave now, and we will afterwards deal with the administration for to cover the issues I've mentioned. Let's have a break of 5 minutes first.